Let's talk about the double top. The double top reversal pattern is a bearish pattern. What happens is you need an early prior trend that's positive in order for it to be a reversal. Let me show you. So what we have in a double top is usually 2 points that force a stock to reverse. So as it's starting out, let's say we have this uptrend, it hits this 1 point here. Okay, so that's basically our first top. Now, the stock will go down because now sentiment or the demand is saying, okay, the price stock is too high. This could be our resistance line, this could be our support line at $100, let's say. The price is a little too high, I don't want to pay more than $100, so the stock price starts to go back down. Then what happens next is the stock starts to isolate in this area. It might even bounce off of that support line right here. And then eventually it creates a second top. Now typically this kind of creates like an M for murder is the way I remember it. But it creates more sentiment to push the stock to go down. It creates more resistance. And as you're creating more of these tops, you're building resistance. And eventually the stock can go down further and it can break through this support line. Now, one thing to really be aware of is that if you're trying to enter this on the short side or for it to go down and you're trying to sell it first and then buy it back later, you want to be really careful because sometimes you have this area of confluence, it's called. Okay, that's a confluence area. And what this does is that the stock may go back up and hit and come back to a new point. Okay, you might create another double top in this region and then it could go down. But you have to be careful that it may actually continue to go through because you don't know. So watch that little area and make sure that it actually cleared that support line before you're entering the trade, especially on that double top. Usually double tops are shorter in time horizon than double bottoms. Double bottoms or support lines take longer to create. Double tops are slightly shorter. So if you're comparing the two within one stock, usually the double top will be shorter and takes less time to develop than the double bottoms. All right, so if you're trading this, how would you trade it or what to watch for? Okay, well, typically if it's going to the downside because it is a reversal pattern, this distance right here is what we're watching. Okay, so the distance from here to here, this is one distance level. Now the same thing here, you take this distance and you move it to this area and that would kind of create your goal target. Now you can use Fibonacci numbers or some other principles to get you there. But again, it's a rough estimate or a goal to get you to that target that you're aiming for. So the distance between the support and the resistance or the magnitude of the movement within that stock price between the support and the resistance, move that down under support and that would be kind of your ideal goal for where it may head. So if you draw this line out, it could go down here and bounce off and now do its own thing again from there. So watch out for that when trading the double top.